Metals Quadrant today, taking a look at the September copper futures, which had a down week and was lower on the week for the fifth week in the last six, and finished the week down 1.61%. Since the spike high on May 20th, copper is now down almost 16%, despite today's positive finish of about 0.4%. But on the high today, for spot 42.80, we were up 1.83%. The low, for spot 33.15, we were down about 0.4%. We had a strong day today in copper, but it was much stronger earlier in the day and then weakened as the session went on. The copper to gold ratio, which we don't talk about much, is historically high right now, which tends to mean strong demand for copper. As of today, the copper to gold ratio is about 0.0196, which is relatively high historically. This suggests strong economic growth and increased industrial demand for copper. A high copper to gold ratio typically means a robust economic outlook and a market preference for riskier growth sensitive assets like copper over safe haven assets like gold, although gold hasn't suffered much either lately, so it could likely mean a strong economic situation that may lead to more inflation, which could also prop up gold, especially if the Fed is not fighting that inflation. Also, U.S. yields today dropped early, but they bounced back after and pushed copper off of its highs. It's part of the reason. Yields were actually negative, and they finished the day strongly positive with looking across the curve anywhere from 5 to 7 basis points higher in the U.S. Treasury yield. And that also strengthened the dollar on the day, which got copper off of its highs and pushing toward that unchanged level.